Sales. I'm the Director of Marketing Communications here at NavCap, so thank you for joining us. This is our monthly broker call, and we provide this as a source of information to our brokers, and so you have the latest information on our rates and terms on a monthly basis. Before we begin, I'd like to point out that you may submit questions during the talk by clicking the Chat with Everyone button on the lower right-hand side of your screen. We'll either answer the questions as we go or certainly get to them by the end of the presentation. Just a side note that I will be recording this call so that we can make it available to our clients who were not able to attend. And I'll also send the link out to you all tomorrow so that you can refer to the information later, so don't feel like you have to take notes if you don't want to. So I'd like to introduce our speaker today. That is Scott Willasch, and he is the Director of Inspections here at NavCap. Scott will be going over what your clients need to know when it comes to requesting an inspection and receiving a draw once repairs are completed. He'll also touch on the importance of a detailed and up-to-date scope of work in evaluating the draw requests. And then after that, Middie Rall, our broker liaison, will take over and talk a little bit about where our current terms and rates are for our loan programs. So let me turn it over to Middie now.
Hey, thanks, Debbie. And I just want to say thank you for joining this call. If it's your first time on the call, appreciate it. If it's not your first time, appreciate you coming back. And we have a few things to discuss today. Scott and I are going to discuss our inspection and draw process for the rehab, new construction, value add products that we have. We're also going to discuss the loan program updates and specifics for fix and flip bridge, new construction, multifamily, and the DSCR rental products. I will tell you for this month, there are definitely some updates on bridge, the multifamily program, and the DSCR rental. Lastly, have a slide to go through how to get your loan to the funding table as quickly as possible. Some of our best performing borrowers and brokers, some of the processes and steps that they follow. As Debbie mentioned, this call is recorded, so if you miss a note or two, you will have this call tomorrow. And if you have any questions during any of these slides at any point, please feel free to hit the right-hand side, bottom right-hand side chat box, or raise your hand. Click raise your hand button. Please don't physically raise your hand. And we'll have a Q&A at the end. If you don't have my contact information, my name is Middie Rall. My cell phone number is 443-228-8182. And my email is middie@navcap.com. I highly want to emphasize that I'm just a phone call or email away. Would love to run through any specifics that you need, any questions that you have, our process, and deals and scenarios as much as possible. With that, going to move forward over to Scott and I's portion of this presentation. In requesting a draws and inspections, when you have a file closed for your borrower, once the file is closed, typically we're going to have the borrower's email address before we close them. So we are going to tag the borrower's email with your broker account. But once the borrower is looking to get reimbursement and start the draw process, they're going to have to create their own member account. They're going to have to sign up on our website, gonavcap.com/signup. In that, there is an option to establish an ACH account. This is to be reimbursed. They can set it up within their member portal, but this is the account they're going to get reimbursed with. After the work is completed and they want to request funds, they would request a draw within the portal using line items in their scope of work that they supplied and we work through before they close. Inspections will be scheduled within 24 to 48 hours. Borrowers can pre-schedule inspections. We will approve release of a partial or full request of the draw based on the work that they've completed for the project. Scott, can you touch base on the timeframes and how they get their draw process started?
Absolutely. I'd like to thank everyone for joining today. Again, my name is Scott, and I'm the Director of Inspections here at Navigator. And I'd just like to step back just a second on the whole draw process and the scope of work. We created a scope of work, a template through Navigator, and to mirror the draw process. Once the loan goes to settlement, or actually I should say prior to going to settlement, we really focus on this scope of work, getting it near perfect as possible. Nothing is perfect, but so we have this scope of work that we created. It's a line item scope of work to address the full aspect of the project. So prior to settlement, I review the scopes of work that you guys send us and pair them with the appraisals. And I spend a few minutes on each scope of work that comes into this, that comes to Navigator to ensure success for the client. So I review the scope of work based off the valuation and the appraisal to see if the client might be missing any items, or if it's overfunded, or if it's underfunded. So I review those and I send notes back to Middie and the sales team to get back to the broker and the clients so that we can do some if there's any fine tuning that's needed on the scope of work prior to settlement. If more funding is needed, whatever the case may be, we try and iron out any potential issues prior to settlement. So now that we've gone to settlement and your client has started working on the project and it's time for him to do his first draw, as Middie stated in these slides, he will go on to the website, sign up, and request a draw based off of his scope of work that we approved and reviewed and modified prior to settlement. The draw requests online, we have it set up that you can request up to 10 items per draw request. Now, if the client has more than 10 items, he would just simply submit that draw request, go back and submit a second draw and state in the subject line, this is a continuation of draw one. Very seldom do we have clients that request more than 10 items at a time, but it happens. So the scope of work and the draw requests should mirror each other. For instance, usually on draw one, the client will put in demolition, permits, engineering costs. They might do the roof. And so then they would go over to their scope of work, and let's say they had $5,000 for demolition, and they feel that they've done all the demolition. They would request demo and $5,000. On the permits, anything that we call a soft cost would be permits. It would be engineering drawings, termite inspections. It could even be something as like an HVAC service, something that you can't physically inspect, but needs to be done for this project to get finished. That's called a soft cost. We require that the client provide a paid invoice for that soft cost so that we can reimburse them for it. It's everything else on the project can be physically inspected, and it would be released on the inspection. So we do ask that the client request their scope of work maybe 3 or 4 business days prior to actually needing it, so that gives us time to get the scope of work, review it briefly. I mean, the draw request briefly to make sure that there's no issues on what they're requesting, and allows us time to schedule either a third-party inspection or we do a virtual inspection. The idea of requesting the draw request a couple of days before you need it is so that you are not waiting on Navigator for your money. You be proactive with this project. So you put in your draw request a few days early. the inspection is coming down, pretty much when you want it, and your money is released in a timely fashion. We have set this up for the sole purpose of ensuring that our client's success in this project. We do not want them waiting on the money or trying to figure out how to get the money. We're trying to make this as simple and as seamless as possible because we want their success so that they feel comfortable using Navigator. They've completed a project in a timely fashion. They've received their repair monies accurately and timely so that they feel comfortable using us again. You guys put in all the hard work getting the settlement. Now we actually want our business model to succeed for them so that they would come back again. That was pretty much slide one, except for the release of the monies. We release it's not an all or nothing. So for instance, if the client he has $5,000 for drywall and he's drywalling the first and partial of the second floor according to the scope of work, and the inspection comes back and most of the drywall's up, some of it's finished, but it's not completed, we would not release nothing. We would release a percentage based on percentage of completion. And I'm just going to throw out percentage. So maybe in that instance, 75% of the drywall is completed. So then the client would receive 75% of the drywall monies in that aspect. We want to release as much as possible, but at the same time, we just have to be prudent with what we release. We can't release more than what's done. I want to make a point here because it happens a lot, and I don't know if it's touched prior to settlement or not, but we do not release monies for material purchased. So if the client, again, in the drywall scenario, is requesting, let's say, $2,500 for his drywall, and we show up and there very might well be $2,500 worth of drywall material sitting on the job, but it's not installed. We do not release money for the material purchase. The work has to be completed. Now I will say we do make some some exemptions if they're like a repeat customer, they've done very well. But if it's his very first client, very first draw, he or she is not going to receive any money for just the material purchase. So please make them aware of that, because we have discovered some clients want to, there's a great sale on appliances, I want to buy them now before they go off sale, and I want to buy all these fixtures before they go off sale, and they spend all their working capital on this stuff now, thinking they're just going to get reimbursed for it immediately, and it can really jam up their project. So that's one thing I do want to point out today.
Absolutely.
I did want to go over two other things briefly. On the scopes of work and the draws as a whole, as a giant picture. It happens, and it happens more times than we think. And that's why I review the scopes of work ahead of time to try and to cut off any issues. But it happens. The client comes into their project, they do the demo, they open up the walls, and they discover termite damage, or this wall, we didn't think it was a bearing wall, or it is a bearing wall, or it wasn't a bearing wall, it needs to be a bearing wall. We didn't think the roof was that bad. It's really that bad. They have to make changes to their scope of work. So when they put their scope of work in at settlement, that's what we use. But we know that things come up. So we allow the client to revise their scope of work if something has to change. A lot of our clients have a contingency reserve built into this for that factor alone. If the client has to revise their scope of work, again, we try to be proactive. So the client would need to revise their scope of work before they put in the draw request, so that we can review it and release the money accordingly. So I'm going to get a scenario again, and I'll use the drywall. In their original scope of work, they had $7,000 for drywall, but after demolition, they discovered the termite damage, and they realized, well, maybe I can take some of this drywall money and put it towards the drywall damage. Well, that's fine if we review it and we think there's enough. But if they go ahead and put their draw request in without the review or without the revised scope of work, it just makes things a lot harder. So just when you speak with your clients, when it's time for the draw request process, that we have no problem with the client having to make a change with their scope of work, with moving stuff around, but it needs to be done prior to the draw request in order for us to do this timely. The whole purpose is for us to be able to get their money as fast as they can and accurately so that they can succeed.
Yeah, I mean, the big thing is
yeah.
we're looking to work with them. So, sometimes projects change, absolutely, especially on the renovation projects, like you're saying. Things can change. They can underestimate or overestimate some of their projects, and absolutely, you're there to help them utilize, lean on us, see if we can change their budget, see if we can work with them on that. That's a nice thing about having contingencies when these deals are closed. And the main thing, working with our borrowers to make sure, once we get that appraisal in, you're working with the broker or the client or both to make sure that we're all on the same page and that that their draw process goes as smoothly as possible. If you wouldn't mind, I want to touch base on the inspection process. Typically, we utilize it can go a few different ways, but we utilize a company called Trinity Inspections. They're a third-party inspector. When you go out after your draw request and that request is sent, we are the party that approves draws. As you touched on, we reimburse work as it has been completed and as it's shown on the scope of work. Borrowers are required to start the renovation with their own reserves, and then we reimburse them as work is completed. That's something that they will have to know before they close, something about that. And I know it changes for multifamilies, but inspection fees are $250 per draw, right, per inspection. Is that right?
That's correct.
Also, I know you want to touch base on this, so I don't want to take over your part of that, but depending on how comfortable we are with the borrower, with their renovation budget, with their experience level, and how we feel about the deal, they can utilize an app within their phone to send over pictures for draw requests. Is that right?
Yes, we've partnered, or not really partnered, but we discovered an app, a company that we're very comfortable with using. It's very user-friendly. The main reason, well, two reasons why I like to use it. It's very user-friendly. And their IT team, if I have an issue, or if the client has an issue, or for some reason there's a glitch, they respond very quickly. Again, the whole purpose of this is to get the client their repair monies as quickly and accurately as possible to be successful. So we have found that clients that have used this app, they at times get their money the same day. They very well might put a draw request in the night before or early that morning. They receive a text message from our from this app giving them an inspection number to go out to the property. They take thorough and detailed pictures of the property. It is then uploaded through the app, sent back to Navigator for review. And on many instances, the clients are receiving the money, or the money's been approved that day. And then now they're just waiting on the ACH, depending if it's bank to bank ACH, it could be the same day or very, very very likely the very next day they're receiving their money using this app. And that's based on a Navigator. We have the option to decide whether it's a third party or the virtual inspection. And in some instances, if it's a new client, very first time, we will use the third party on the first inspection as a test, if you will, to see how smoothly their operation is running, their project is running. And if the third party inspection comes back pretty clear with what they're requesting versus what is done, then we might give the client the option to switch over to the third party, making the process a little smoother. The clients that have used it, they love it. They do. So, and we do prefer to use that whenever possible, because it makes their it's a better tool for our client. They get their money quicker. And most likely they get their money quicker because the report is sent back to us a lot quicker. So that's all I have to say on that.
Okay. Yeah, just emphasize we're building relationships with our borrowers. We're partners with them. And that's a tool that we can utilize, something that we've evolved from even in the last 6 months, a year, 2 years. So absolutely. One thing I want to emphasize for anyone on this call, watching this call later, I or one of our loan officers will always be the point of contact for whatever you need. But Scott is going to be the main point of contact for your borrowers for their draw process. If they have discrepancies in their contingency repair reserve, which is something they would set again in that scope of work, something that they would set for unexpected costs or miscellaneous costs, I would highly emphasize that they email inspection@gonavcap.com. And as well as if they have any questions about the draw process further, also email inspection@gonavcap.com. Really just want to emphasize, and Scott, I really appreciate you coming on the call today, you taking the time to explain the draw process and making that as clear as possible for our broker partners and our clients as well.
Thank you. I appreciate the opportunity to do this. We look forward to building relationships, lasting relationships with brokers and clients. Some of our repeat customers have 10, 15 bills underneath of them. And it makes our job so much easier once the broker and once the client have understood our system and realized that it is meant for it was designed for their success. It's wonderful to see these people build wealth through our company. So if any of your clients or brokers have questions, after settlement, referring to the draw request, I do ask you to email me first, and please put the property in the subject line, because I'm dealing with hundreds of properties, and just a question without a property attached to it could take a little bit longer. Calling me, I will take a phone call, but it's best use time would be an email first, so that I can get all the file pulled up and have all the answers directed before a phone call. So again, thank you for your time. Looking forward to doing more business with all of you. Thanks.
Thank you, Scott. We do have a video that I am going to send out to our brokers. It is a resource on our website about how to utilize the draw process and through our web portal. Be happy to share that with anyone if they need it. For the sake of time, I'm going to move forward to the loan programs updates that we have. Please run through those and touch base on how you can get your file to the closing table as quick as possible.
Once you have closed on your loan.
Sorry about that. So we are based out of Maryland. We really mainly lend from the DC metro area out to Colorado. There are a few states that we do not lend in between. That would be New York, Minnesota, and the Dakotas. Unfortunately, we do not lend on the West Coast. So anything west of that Colorado area, it's not something that we'll be able to finance at this time. Just a few of the loan products that I want to run through today that have adjustments. Bridge loan, which is a short-term acquisition and or stabilizing financing, short-term meaning 12 months. Buy, fix, and flip, buy and hold, residential 1 to 4 units. DSCR rental loans, this is actually 1 to 10 units for residential. That has some updates this month. New construction, ground up rebuild, 1 to 4 units, and multifamily acquisition and renovation. Moving forward to the DSCR rental loan program, this is a long-term financing option for our investors. It supplies a financing option for long and short-term rental options. I will tell you, if you've talked to me in the previous months or you've been on the previous month's calls, we had 2 lending options, a 30-year fixed and a 5, 7, and 10-year interest-only ARM. As of beginning of this week, the ARM product is not something that will be available moving forward. We are working on supplementing our DSCR rental loan program with some more ARM options, but that's kind of an update for this month. Our 30-year fixed, it does purchase, rate and term, and cash out refis. Minimum loan sizes from $100,000 to $2 million. Rates have gone down slightly due to the 10-year bond. I would say pricing, best pricing you're going to see is at 7.5. These are fully amortized notes, but I will tell you there's a 5 and 10-year interest-only option on those. And YSP on the back end is available for your brokers if that's something that you're interested in. In general, capping points for our brokers per deal is typically at 2. So however you want to structure that, I can work with you and we can run through that scenario individually. Max LTV on purchase and rate and term is at 80%. Cash out is at 75%. There are prepaid penalty options. Generally, the longer the prepay that you're going to have, the better rate you will have. But again, we can run through that scenario individually. To utilize this product, your borrower is really going to need a 660 score plus. You're going to see best terms at 720, 750 plus. Escrows, meaning taxes and insurance, are included with the PITI calculation for DSCR on that debt service coverage ratio. Going to move forward to the bridge loan program. This is another one that has adjustments this month. It's a short-term note. It's really to acquire or stabilize. Some practical applications that you see with this product are the borrower's looking to self-fund the renovation. They have a short window to complete the transaction. They want to pull cash out on a completed project. They want to acquire and refi conventional or DSCR, or their current loan term is maturing and they need additional time. I want to touch base on that last bit. If your borrower's note is maturing and they need additional time, something to keep in mind is, have they been current with their note and have they missed any payments? Now, I know if their note is maturing, they may not be able to make any more payments, but we just want to make sure that the borrower has been current on their note. Just something to discuss with them. Generally, this is the easiest loan to complete because we're not looking at value add. We have fast-tracked appraisals that typically come back in 3 to 5 days. Minimum loan size is $75,000. Terms are 12 months. There's no prepay. There's no escrows. There's not a reserve requirement like you see in a DSCR loan, which it could be 3 months, 6 months, 12 months, depending on that ratio. Rate and term refi is at 70%. Cash out at 65%. These are fixed rates. And with all of our loan products, we're not qualifying them financially via tax returns, via DTI, anything like that. We're qualifying them via 2 months bank statements. So if I didn't mention it on the last slide, if you have any questions about these programs, please feel free to input them in the chat box. We'll be happy to go further detail at the end of the presentation. Moving forward to the fix and flip buy and hold program, this is essentially the same product. It's a 12-month term. There's no prepay. We're financing a very large portion of the purchase price and the renovation for this. Whether they buy, fix, and sell this property, or buy, fix, and refi down to a DSCR or a conventional product, it really doesn't change the product whatsoever. There's no prepay. Their time is their money. One thing that Scott really, I believe, is trying to emphasize with this is we want to build a relationship with you and your borrowers. And that not only means getting these files to the closing table, it means after they close and they need a draw, we can get these draws back to them very quickly. And if there are discrepancies in their budget or something that happened along the way, we can work with them. It just has to be within reason. Moving forward to the new construction loan program, this is really geared for 1 to 4 unit residential construction. No mixed use, no strict commercial, anything like that. The minimum loan size is $85,000. Really goes up to $3-4 million. Terms are up to 12 months. There's no prepay. To qualify for these notes, the borrowers are going to need a 680 middle. They are going to need at least 2 new builds in the last 3 years. I know it says 3 up here, but that's really an update with this month, which I missed, frankly. And in some cases, if they have 1 new build and other experience, or if it's a property that we like and they have high scores, it's something that we'll look to work with them. As far as non-Dutch is concerned, which really means paying on drawn funds, funds that they haven't used in this project, funds that they have set aside for the renovation, that is available. It costs costs 1 origination point at closing. Really, the reasoning is for this, we are paying on this money every month, so this offsets that cost until they start using it. Another thing I'd like to mention is we get a lot of requests for luxury or very large new builds on this program. This program really isn't geared for that. I just want to speak frankly, love to do as many new constructions as possible, but also want to be very forward with what we can do and what I can do for you. Moving over to the multifamily loan program, this is another one that's seen some updates. This is really geared for now, capped at 10 units, so 5 to 10 units. Purchase, refi, also rehab products. $250 to $3 million. If you have a $4 to $5 million project, I would highly emphasize that you send it over. Love to look at it a case-by-case basis, but anything over those 10 units is going to be a real tough thing for us to do right now, to be frank. Not to say that it won't change, but that's where the product is. These are 6 to 18 month terms. Rates are starting at 11.25. Credit needs to be 700 plus, whether it's loan to value or loan to cost in this equation with a value add. Max leverage is going to be 75%. And the properties need to be in a major urban area. One last point on this product is the borrowers need to have experience with multifamilies for what they're looking for. So, or at least relative experience within the last 36 months. Not to say that there won't be exceptions, but that definitely helps build the borrower's profile. Moving forward, best ways to get terms. This gets asked a lot via phone call when I talk to our brokers. My contact information is below. If you do not have it, I'm always a phone call or email away. But frankly, the most streamlined and efficient way for you to get pricing on your files is through our online portal. You would log into your member account, and just for pricing, you would submit a pre-application. This does not start underwriting. It does not pull credit for our borrowers, but it's just saying, Middie Navigator, look, I have borrower A, and they're looking at 123 Main Street. What can you do provided given this information? And I'd be happy to get your terms back on the same day. Term sheets will be sent directly to you. And, you know, if you are ready to move forward, there's a link for full loan application via the term sheet. There's also full loan apps through your member account. If you don't have a member account, please feel free to go to our website, navcap.com/signup. And if you need anything with regards to that, just give me a call or an email. I'd be happy to walk you through it. Last point on this presentation before I let you go. I apologize as we're running a few minutes over our 30-minute time limit. I respect your time. I just got a little bit longer today. The quickest way to get your file to the closing table is really shown throughout this slide, frankly. This is where our top performers borrowers-wise and top performers broker-wise, this is what they do. Generally, and I will say generally, overall, 15 to 30 days to get your file closed. If you have a quicker turnaround time frame, I would say in some cases, especially locally in the DC metro market, 10 days is possible to get a file closed. Typically, the faster we receive the required docs, the faster we can close your file. And really, we need you to upload these files via your member account. Our top producing borrowers and brokers, they really follow this process. They submit the full loan application. They also submit the title company information so we can get a title order in. They pay for an appraisal. Usually on the broker side, you either need to get the borrower's credit card information and pay for it via your account, or you need to let me know that your borrower is going to sign up so I can tag their account to your account and they can pay for the appraisal, themselves. Lastly, they securely submit conditions through the web portal. I don't mean to belabor this point, but we all work through email throughout the day, 7 days a week. There's really an email or a time that doesn't, you're not looking at your emails and shooting those over. To keep these conditions secure for your borrower and to streamline our underwriting looking at your files, I would just emphasize, please submit the conditions. As far as title work and appraisal are concerned, we order those so you can sit back and relax on those too. One thing I want to emphasize here with you all is that your broker fee is always listed on the term sheets that we send to you. It's also always listed in our title request. You are getting paid through title. So once this file gets funded, you are either getting a check or a wire through the title company. We do not hold on to those funds. Again, my name is Middie Rall. My contact information is seen here. My cell is 443-228-8182. My email is middie@gonavcap.com. I really just want to say I appreciate everyone coming on this call today and working with us and the potential opportunity to get deals funded with you and I. And Debbie, I'll leave it over to you. But if anybody has any questions throughout the slide, please feel free to add them to the chat, and I'm happy to run through them. Thank you.
Thank you so much, Middie. If anybody has any questions for Middie or for Scott about inspections, feel free to raise your hand, or you can put it in the chat. And if you think of something after the call, feel free to reach out to Middie directly. Here's a question. Is there a cost to get paid via ACH?
Yeah, I'm assuming that's the ACH for the draw process. No, so there's no like wire fee or anything like that. When they set up that account via their member, via the web portal, once their draw is approved, they're just getting ACH'd.
Great, thank you. I just want to remind everybody that this call has been recorded, so I will be sending out the replay for the call later, either later today or tomorrow, so you can watch it at your convenience. And like I said, if you have any questions for Middie or for Scott, feel free to email us. And Middie's contact information is on the screen. And our next broker call will be on Wednesday, March 1st. So please mark your calendars for that. We hope you can join us for that one as well.